Drop it.
Welcome to Be Real, the Maryland Real Estate Podcast. I'm Brad Cox with the Vesta Group of Long & Foster, joined by...
Oh, I thought you were going to say my good friend or something like that.
Well,
I am.
I thought I'd just leave it open today.
Am I supposed to? All right. Co-host. Co-host Michael Becker of Sierra Pacific Mortgage.
Michael,
Yes,
how
sir.
are you?
I'm well.
Good.
Super good. We have a friend and associate in the recording studio as well.
We do. Another guest. I'm loving having these guests.
It's fun.
It's awesome. Yeah, so we have Jeff Nengel with Bay State Insurance Group. Jeff,
Well, good afternoon. Jeff Nengel here.
good to see you, man.
On a Sunday. It's a beautiful day outside, getting ready to rain again for the fifth day
It's
in
okay.
a row.
You know what? I got pretty lucky in the golf tournament. It was 3 days, and when we went up, it was 88, 91, and 92% chance of precipitation when you look on the daily forecast.
Right.
And couple half hour here or there of drizzles. All the rain came at night or before or after we
got lucky.
played. Even yesterday, we finished around the last match before the playoff, right before the thunderstorms rolled through. So
Yeah.
we
Dodged
were
a bullet.
Dodged a bullet.
There you go.
Unlike I did in that bunker I was complaining about.
Always rake your bunkers.
Always
uh,
rake
so
your bunkers.
I had a
Yeah.
pretty good shot. I just missed the green a little bit and bounced into a greenside bunker. And I walk up and it's in a big heel print. And we were saying, just rake your. I mean, and it's this is a member guest tournament at the club.
Right. You'd expect a certain level
Well,
of
even if-
adherence to the rules.
I can't
and
imagine. Well, not only members are pretty harsh, pretty
Yeah.
good. You know, you would get beat up by another member if you didn't do that. And if you're a guest, you're always looking at them, watching them do it. Everybody I played with, they thoroughly raked the bunkers, and I can't. I mean, he raked where he hit, but he didn't. His
As he
his
walked
steps
out.
as he walked
Yeah.
out,
Yeah.
he didn't follow him out. So it's one of the things. It's my motto in life: leave things better than you found them. So do that with the
Good
bunker.
life. Fix your divots,
Yep,
rake your
fix
bunkers.
your-
Yeah.
Fill in your sand. You
I
know,
love it.
Yep, exactly right.
So, words to live by.
Okay.
Rake your bunker.
Rake your bunker.
That's awesome. Did you do anything fun this weekend so far, Jeff?
Well, my wife is away
Oh,
at work.
Mine is too.
Oh gosh,
So-
here we go.
I got to sleep in my bed early and watch TV. And she called me and said, "Why are you in bed so early?" And I'm like,
Well,
swear to
because I'm not here to snore and wake you up.
snow.
Well, it's not only that. So in the bed, I don't know if it's with you guys, but I have no control over what's on the TV in the bedroom.
Right.
Absolutely none.
I don't have control. My wife bought me for I think it was my birthday one year. A nice like a 75-inch TV. And-
Nice.
But that was my gift.
And you're
When
supposed to
I
watch
come
it.
home,
That's where you could watch.
it's whatever she's got on TV is what we're watching.
Oh, and then,
Well, whatever TV I buy next, if it has one channel, it's called Netflix. That's all I need in my bedroom because
so it's like that. Yeah. So the bedroom's controlled by Mindy, and if the kids are home, we call it the sunroom, our family
Right.
room.
Yep.
It's controlled by the kids. And if I want to watch what I want, I get to go to the basement.
Yeah, yeah. I
watch,
hear you.
watch the black and white.
No, it's not a bad.
Right,
It's
13-inch black and white.
That was when
Rabbit ears.
that
Remember
was
those?
well, I totally do. You used to watch Prices Right on it when you were home sick and you got to get the TV in your bedroom, right? Your mom would move that black 13-inch
Right.
black and white into your bedroom. That's the only time you had a TV in your bedroom as a kid.
Yeah.
I was the original remote control. My father would say, "Get up and change
That's
your
right.
channel."
That's right.
Turn it up.
That's why you have kids.
We're
Remote
aging
control.
ourselves.
Yeah.
About
Yeah.
this, but
Right.
Kids will look at us like, "What are you talking about?"
Yeah,
Right.
rabbit ears.
Like there's a TikTok video out there. I know we're going off topic, but guys watching a video of Gen Xers saying how we drank out of the hose. Right?
Yeah. Right.
And this guy's and he's a millennial or Gen Z, and he's like, wasn't the sink an option? And then it goes back to a woman who's a Gen Xer. She goes, no, you don't get it. We weren't allowed in the house in the summertime.
Right.
You were not allowed in the house
You're
during
out.
the day in
Till
the summertime.
the street light came
Yes,
on.
exactly.
Yes, exactly. That's awesome. All right. Well, listen. Enough of the chit chat. We got
friendly
content.
banter.
We got to get out to these people that are bravely listening to whatever we're talking about this week. And so, and this week's episode, by the way, Jeff's joining us because we're talking about insuring your home. And we have some insider tips And Jeff's going to share his years of experience. But before we get into all that, we got to do the rundown. So, Michael.
Yes, sir.
What you got going on in the mortgage world?
Actually, another good week for mortgage application. Now, this is the week ending June 16th.
Encouraging.
Last week, we said there was a big jump in applications.
Yeah.
And a huge jump when you remove the seasonality. It was like 16%, not seasonally adjusted.
Mm-hmm.
This week, it went up only 0.5% overall. That's both refis and purchases. Refis declined 2%. Purchase on a seasonally unadjusted number went up 1%. If you take out the seasonal adjustment, it actually declined 0.1%. So I think we're right where we should be on a seasonal basis.
Yep.
This is the time when mortgage applications tend to increase. I'm pretty happy to say that I had a young couple who have been trying multiple times finally get under contract this weekend, so that's good. We're still going to, well, you're probably going to talk about this in yours, not to steal your thunder, but we're still dealing with an inventory shortage.
As you were talking about the applications increasing, I was thinking in my head,
where are they going to buy homes?
If only there were houses for those people to buy.
Mortgage rates, this report, the Mortgage Bankers Association reported the end of June 16th, rates ended at 6.73%. We go daily. I checked on Fridays. We're recording this on Sunday the 25th, Friday the 23rd. Mortgage News Daily had the average rate. Now, their rate is usually very low or no points.
Right.
It's for the best qualified buyers, and it's an average amongst well-priced mortgage lenders out there. They had 6.92.
Right.
You're probably somewhere in that range. And we've been range-bound for a while. It's been a pretty tight range for the last month when it comes to mortgage rates. 6.6 to 6.9 in that range, up and down any given day.
Right. With a little blip over 7.
Right. So based on that, I don't see us breaking out of that. I didn't see any data points in the coming week to break us out of that range. We're going to need either some good inflation news, and we have a couple weeks before any inflation data comes out, or the jobs report that comes out the first week of July, after July 4th, that Friday afterwards.
Yep.
That can move things. I will say this, that jobless claims for the second week in a row were elevated. Not that we want to see people
losing their jobs, right?
But a slowing labor market will put downward pressure on wages, which tends to keep inflation from going up. And we are due to see, a lot of people have been talking about the rent or the housing component of the inflation, core services inflation, which is the Fed is looking at.
Yep.
That is due. It's been elevated for a while, and it has come down in real time. So we'll probably see that work its way into the inflation number. And last year's June headline consumer price index month over month was the biggest of all last year. It was 1.2%. That will fall off. So headline inflation should come down. Problem is, I think that everybody knows the Fed's focusing on core and specifically core services.
Right.
So, but everything seems to be lining up. I'd like to see inflation come down a little bit so we can get better rates. And that'll kind of apply. Here's a little teaser for people who are listening. Might have to wait till the end. What happens with housing wealth?
Yes.
And below median income borrowers would happen with them as well.
Good.
Like that teaser?
Good little teaser there. Yeah, nice. All right, so let's get into the real estate side of things. List prices in general, we're starting to see that summer increase, right? So the listing prices increased slightly over the previous week, and I'm pulling data from Bright MLS here for the Baltimore metro market. Median list price was only up 0.2% over last week, but that, as you mentioned earlier, Michael, that the strain on inventory, it's keeping prices elevated. Yep, it's tougher and tougher for buyers, and competition is starting to heat up because, as you mentioned, the applications are up, and there's some reflection of the inventory challenges in the market as well. The median time to contract went down a day from last week, so it's getting, homes are going a little faster. The time to contract is actually 7 days up from 2022 right now, but this year we're watching that trend reverse itself again.
Seems like
getting back into that super frothy, very competitive.
Yeah, you shared that headline from
market.
Housing Wire.
Right. Horsing Wire.
That's for the thoroughbred
right.
racetrack fans. Housing Wire.
Yes.
Sorry.
Yeah. Yeah, but anyway. All right. And then the challenge with sellers being reluctant to list, right? The listing activity it usually begins to wane as we get into the summertime, but we've seen sharper than normal decreases.
That's not good.
We're down 5.7% compared to a week ago over the Bright footprint. Consistently, significantly lower than the levels we saw in 2019. So while
and that's why we need
activity
help
is
with
down,
mortgage rates. I think
absolutely.
they don't have to. We've said this time and time again. We don't need them to drop a ton, not all the way back down to 3%, but think people would be willing.
If you got into the fives, people would be willing to break those,
especially given the equity they
and,
have in their house. If they sold a house, right, they might not need to take as big a mortgage out. And it's not about interest rate. It's more about mortgage payment.
Yeah.
Everybody focuses on the interest rate it's doing it. It's really
right.
what
Nobody
they're paying.
pays attention. Once they buy their home, they don't know what their rate is. Nobody knows what their rate is that they're actually paying.
Right.
They just know what that monthly payment is. But yes. All right. So showings year over year down 11.4%, compared to a week ago down 11.2%, but still trending above 2019. So showing activity's up. There's still people out there buying. I wish sellers could get that message and find a way to agree to put their house on the market, because we definitely need the inventory. The buyers are out there. Sellers have seen a significant amount of appreciation in their homes over the past couple of years. Yes, your rates are probably awesome right now, but overall, I think you'll make out if you sell.
Well, and they have to, if they're happy where they're living, they're obviously not going to sell. But
yeah,
the idea that people who have change of life
are not, they're not following through with any kind
they
of
may
move.
be putting it off, and that's
Yeah.
the problem. Like people who may want to downsize, they might want to put it off and hope for. There's no rush to get out of that house.
Right.
So they may be putting off downsizing for a year or two.
Right.
Is it all because of interest rates? Because they're locked in at 2.5?
Like so there's a guy on there. It's a great question.
It's the
Jeff.
mentality.
There's a guy out there. He used to be on Bankrate with me and vote, but he works with Housing Wire, not Housing Wire, but Housing Wire.
Right.
His name is Logan Motoshami,
Yes.
and he claimed it has nothing to do with interest rates. It's monthly payments, which kind of are one and the same. But like I said, it's because everybody claims, oh, nobody's going to move. No. It's about, like, if you wanted to downsize.
Well, the thing that they see in the market is the interest rates. The thing that they see in their pocketbook is the payment.
Yeah, okay, but here's his argument. So let's say you're in a house, and it's a big house, and kids are gone, and you want to downsize.
Right.
And you have a mortgage that's $2,200 a month.
Right.
If you could go sell with the equity, downsize a little bit, and your monthly payment's the same or smaller, you can probably make that move.
Yeah.
But if it means an increase in a monthly payment
With a smaller house.
with a smaller house, you're probably not going, because of the higher interest rate, you're probably not going to do that.
Right.
And I think it's the monthly payment comparison that may scare people from listing and selling their house.
Yeah. Yeah. All right. So anyway, new purchase contracts year over year, 20.6% down. A week ago, compared to a week ago, 4.9% down. Median time to contract, we already talked about. Flat week over week, but year over year, we're up 11 days. But as I said, that trend is reversing. New listings down 26.4% year over year, but up 1.2%. Be nice if it was up 20.
It would be nice.
But up 1.2% from a week ago. And then the median list price, again, flat. Third week in a row at $375.
I think people finally got in the picture not to list it crazy if you wanted to sell.
Yeah.
Price drops, because occasionally you'll see that on Zillow or something, and it's weird how the price cut homes are still sitting there.
They are. Well,
You listed at the right price, or like you get a bidding war.
Pricing is an art and a science, and the art of it is understanding what's going on with the market and emotions, and the people are fed up with paying over and over and over and over over the list, and so they're getting tired of it. Nobody wants to do it anymore. They're still doing it, but they don't want to do it. And so the homes, if it's not this pristine, shining beacon on the hill
HGTV
type home, right?
Yeah.
It can sit.
Do all people think that their home is worth more?
Well, I think that's
probably challenging as a
overall.
listing agent. You're probably right, because they see what else is sold, and they may not be comparing it.
It's very common. Yeah, it's very common when we walk into client's home for a listing appointment. It's very common for sellers to have a somewhat inflated opinion of what their home is worth, but that's part of the dance, part of the conversation that we have with them is just helping them to understand. And we put all the data in front of them and say, all right, well, and this is my strategy when I have those conversations. I put all the listing photos from all those houses in front of them, and I say, okay, well, this one sold for X. You want X plus.
Right.
Compare your house to this house.
Yeah, why?
How does your house compare? And be objective. Let's look at that kitchen. Do you have these finishes? And then we go through room by room and help them to understand this is why we'd be challenged to get that price. The big thing that you don't want is you don't want to wind up chasing the market. You don't want to wind up pricing too high, having it sit, and then you start chasing the market down, and then people start to wonder
what's wrong
with that property. So that's why pricing's so important from the very beginning. Yeah. Awesome. Anyway, all right. Well, so guys, great information. Thank you. When we come back, we're going to take a quick break. And when we come back, we're going to get into the thick of it with our guest here on insuring your home, some insider tips. So we'll be back in just a second with the scoop. Back to Be Real, the Maryland Real Estate Podcast. I'm Brad Cox, the Vesta Group of Long and Foster. My compadre.
There we go. Michael Becker of Sierra Pacific Mortgage. Thanks for calling me that, Brad. I feel so much more loved.
There's lots of love, man.
Absolutely.
I actually have another really good friend who I used to work with years ago, and he's actually Mexican. And so he and I, every time we see each other, it's compa. Yeah, he's Uncle Charlie to the kids. I mean, we love him. So anyway, I haven't seen him in way too long. I gotta get out there, and I'm gonna get out there actually in December. I'll be out in LA for another wedding, one of 5 that we have in the next couple of months. It's crazy.
Well, that's good.
Wedding seasons.
Yeah, it's not the kids' friends, it's your friends.
Well, one of them was our friend's daughter, who was also a client, which that was really awesome, though. She just got married. Then my wife is out in Chicago right now for a family wedding. I just couldn't go because it's the wrong time of year for me to not be here. And then we have the Colorado wedding in September, and then we got another family wedding in December, L.A.
Michael and Mindy in October.
Whenever of 2035.
It's got to happen sometime, I would think.
Yeah,
who knows?
We're encouraging you.
I am happily unmarried.
Yeah, well.
As happily unmarried as you can be.
Mm-hmm.
And in a very committed relationship. We just celebrated our 10th engagement anniversary.
Yeah, which is great.
Oh, I'm doing that speaking low thing again.
Well, you got romantic.
Yeah.
That's what it was. I was using that
smooth
Barry White.
It's the Barry White. It's the Barry White and Michael.
Yes. Light some candles.
Yeah. Yep. Oh, my God. All right. So, anyway, we're joined by Jeff Nangle from Bay State Insurance Group. Jeff.
Good afternoon.
Really thrilled to have you here, man.
Thanks for
Thank
being
you
here,
for
Jeff.
taking the time. Definitely. So, insurance is one of the big things that you need to take care of when you're buying a home, right? Everybody needs to have a policy. You don't drive your car without having insurance. You don't buy a house without having insurance. So there's a lot that goes into that. And I think very often people too often will just say, oh, I'm just going to use the insurance company that I use right now. Or my parents told me the policy that I want to use, the company that I want to use, or whatever. And they don't shop for good insurance. And that's one of the benefits that I try to make sure my clients know about working with a broker, right? Because you have the ability to shop those rates around. You don't want to overpay, but you also want to make sure that you have adequate coverage, that you protect yourself financially. And I'm telling you, when you compare these policies, if you're trying to do it as a layperson, comparing apples to apples, it's a nightmare. It's a challenge.
That's right.
So having somebody like Jeff in your corner makes a big difference. And kind of this theme that we've been working with since we've had some of these other guests on here, who you work with matters. And we really love Jeff, so that's why we have him here. So Jeff,
I appreciate it. It's important. I mean, you're right about insurance. You can overpay.
Yeah.
You can underpay.
Yeah.
What do you mean underpay? You mean not have the right amount of coverage?
No, coverage.
Yep.
Gotcha.
So we see it all the time where folks that have had the same policy for years and they never looked at it.
Yep.
And it's not their fault.
Yeah.
It's their agent's fault or whoever they're. And we're like, this is not going to cover your home.
I can't tell you how many times. So last couple of years, all this appreciation in home price, I regularly have conversations with clients where I say to them, you should re-examine what your home insurance policy is right now because you may not have enough coverage given all the appreciation that's gone on.
Well, do you know anyone that has put in a nice 6-figure kitchen?
Oh,
absolutely.
Sure.
Or a 6-figure plus basement,
Right.
or deck, or
any of those.
Right.
Yep.
Those are the calls that we like to make, and when we make those calls to our clients, I say, listen, we need to talk about increasing your dwelling coverage,
Right.
because that's when you're underinsured,
Yeah.
and it's important to keep up. We do cost evaluations and estimators, and we want to make sure that if something happens to their home, fire, any kind of peril, we're going to make sure their home is rebuilt the way it is now, and and their personal property is replaced. There's a lot of policies out there that do cash value policies, old policies. People don't know it.
Yeah. Right. So if they're not looking at these things, that's a problem.
Right.
So
So we dissect the policy from top to bottom, from deductibles to premiums to cost estimators to dwelling costs to protection. And everyone always thinks like, hey, I'm buying insurance on my house. You're really, really buying insurance to protect you.
yeah.
It's your asset.
Right.
It's the bank's asset.
Right.
It's they want to make sure you're covered. So
And the bank's going to require that you have that policy.
right. And that's just the property side. Now you have a liability side.
Yeah.
We've had folks that make 6 figures times whatever, and they have $100,000 of liability.
Somebody falls on their property.
And they know they have deep pockets. They're going
Right,
to
they
go
have deep
after it.
pockets.
Ooh, yeah.
And
Yeah.
the reason they have 100,000 is they didn't know and didn't change it.
Didn't even
Never
think
changed
about it.
So when they
Right.
bought the policy 10 years ago,
Yep.
$100,000 was mainstream.
Yeah.
Today.
All right. Well, so before we have a bunch of questions for you, Jeff. Before we launch into all that, I have one kind of, there's been a lot in the news lately about insurance companies leaving certain states, and I just thought it'd be an interesting topic to bring that up because you look at California, and it didn't really start in California. It was really kind of Florida that kind of led the charge, right?
Right. Louisiana.
In Louisiana, any of those flood-prone coastal states, yeah. So, what's going on, and what do you think is the solution for people in those?
Well, there used to be a song called "I'm Going Back to Cali," but I think it's the other way now. People are leaving Cali, and the reason is so State Farm recently pulled out or said they're not writing any new business in California.
Yeah.
Followed by Allstate, who says we're not writing. This is California, the whole state of California.
Right, and these are big companies.
Followed by Geico, that says we're not writing any new business. We're still doing line business. The agents or the people that have those carriers can keep their policies. They can renew them, but those companies are finding ways to get rid of them. They do not want to be in the state of California.
Yeah, like as soon as you have and file any claim,
you do a towing
dropped.
claim, you may not be renewed.
Yeah.
Wow.
Any kind of reason. And the reason is they're not making money. So
Yeah.
State Farm came out and said that they cannot write a homeowner's policy with it's called Proposition 103, the California law says insurance companies cannot raise rates at a certain level for whatever reason, and they have to follow certain guidelines. Now they're saying if people have prevention in their homes with forest fires, with roofing, and they have to be discounted. State Farm cannot, or what they said in Allstate, that they cannot make enough money
To cover
on the policy to cover the
risk.
Cover the risk.
Actuaries are having heart attacks as we speak.
Well, and so on top of that, so insurance companies, a lot of people don't understand. Insurance companies buy insurance.
Yeah.
And they buy what's called reinsurance. And the reinsurance carriers are increasing prices. Inflation costs is going up.
Yeah, it's more expensive to rebuild the house.
Right. Build a house. So State Farm last year, just around the country, not just in California, it's worse, took in $100 and paid out $127. And that's just one company. We're not picking on State Farm. This is
Right.
pretty much across the board of what insurance carriers are doing right now. So what's going to happen in California is 2-3 of the top carriers have left.
Yeah.
What does that mean for competition?
Right.
Competition, less competition,
price is going to go
prices
up.
going up.
Yeah.
So it's going to actually move people out of the housing market because people are going to be able to spend $9,000-$10,000 just on homeowners coverage.
Yeah, that's just.
And it happened in Florida. Florida's a little bit different, where it's more claims driven.
Well, the whole condo situation down in Florida.
Right, the whole condo.
That was.
People have condos that were paying $900 are paying $9,000,
Yeah.
and only because of
Can you
hurricane
imagine?
and flood
Yeah.
insurance.
Well, all that deferred maintenance in that condo,
Well,
the catastrophe that they had, right?
that's an interesting topic, Brett, because that's another podcast. Because condo approvals, even up here,
Yeah.
if you're putting a small down payment, generally you have to do a full condo project review, and that's part of the underwriting process.
Well, in Florida and California, they're saying people have enough money to buy a home, and I'm not paying this homeowners rate. They don't have to. They don't have a mortgage.
Yeah.
Right.
But they lost their $2.5 million house
Yeah.
That's
in Hurricane Ian.
Right.
There's people that did the same thing.
Oh, really? There are people who paid cash, lost it to Ian, yeah.
Right, because
They were pretty. Yeah, that came in right around Sanibel Island. I remember when it came
Right.
in Fort Myers area.
Fort
right?
Myers.
Wow.
So there's tons of that going on in Florida, and California is not quite as bad as Florida right now yet, but it's heading that way. Florida, you have the problem with Florida is you have companies that are going insolvent. Insurance companies are writing 1,000 policies one month, and next month they're out of business.
Wow.
And so, what do you do as an agent? You're just rewriting business and trying to find a home, but they're running out of insurance carriers.
Wow.
And,
Okay.
Yeah. So.
Well, fun times. Well, I'm glad we're here in Maryland. I tell you, everybody always asks me, where do you want to retire to, and where do you want to, and do you want to go down to Florida? Do you want to do that? And I'm like, Maryland is. We don't get the extremes in anything, right? The weather. I mean, every once in a while we get storms. Right, but they're never the worst.
I think you're forgetting January 2016 when we got 30 inches of snow, but that's an anomaly.
But that's an anomaly.
But
That's my
a
point.
third of an inch this year. That's
Right.
Right.
I just don't want to be cold anymore.
No, I get that. But it's honestly, I feel like our state is one of the safest of the states that you could live in, because we just don't tend to get the extreme weathers. We also don't get all the extremes in the housing market that a lot of other markets get. I mean, here's the headline: Maryland, it's a great place to live.
Well,
anyway,
you could do the halfback.
You should get a job with the governor's
Department
office.
Yeah, right, sure.
Or do the halfback. People move to Florida, then they move halfway back to South Carolina.
That's looking more and more appealing sometimes.
Yes.
To some people.
Well, all right. So Jeff, we're going to jump in. Got a bunch of questions for you. First one is, somebody's looking to buy a home. They need to talk to some good resources. What advice do you want to give somebody about researching insurance companies and providers? What are the things that people should be aware of when they're choosing their insurance company?
Well, that's a great question, great lead in, because we try to write companies that are good claims paying company that we have a good relationship with in claims paying, because if and when a claim happens, we want to make sure that they're covered.
Yeah.
So what does a claim pay? So we have to look at replacement value and make sure it's the dwelling coverage of the replacement cost to rebuild their home. And most of the time when we're doing insurance, we're talking catastrophe. We're talking a total destruction, But we want to make sure that the home is priced properly, and the replacement cost estimation is accurate.
Yeah.
Each carrier has their own model, and each carrier is different.
Right.
So we want to make sure. Sometimes they're way off. So we want to make sure and do our own homework. Within that, we want to make sure that we properly look at the house. We come across quotes all the time that are bare bones, and a house house is a 5-star home.
I can't tell you how many I've had clients who called me and said, No, I don't need insurance. I just got a quote from this, I don't know, animal named insurance company, and they've written this policy for me, and it's much lower than anybody else that I've ever talked to. And I'm like, what's in that policy?
Right.
What's in that policy? What are you covered for? Do you know?
Well, what you're finding now is, right, do you know, was the kitchen redone? You have a brand new kitchen. You have a brand new, bathrooms. You have a finished basement. So we probably have 27 touch points where we're looking at from moldings to flooring to decks to kitchens are huge. Kitchens and basements and finished basements. And we have a model.
Yeah.
And the model tells us what the replacement cost is. Folks sometimes are like, listen, my replacement cost is, my house isn't worth that much, but it is worth that much to rebuild it.
Right.
Remember, you got to tear it down, you have to turn off the gas, you have to take everything away, demo it, and rebuild it. With today's inflation numbers, that
more
number's
expensive too.
More expensive. So we keep increasing those numbers, and then we look at roofs. Roofs are the number one claim in the state of Maryland.
Yeah, hail damage.
For hail damage and water damage.
Yeah.
So a new roof, we want to look at the age of the roof. Mm-hmm. It's important. If you have a new roof, we want to see it. If you have a new sump pump and a battery backup, we want to know it.
Right.
Because
those kinds of things can lower your insurance costs if they're new.
If we have a burglar alarm installed, we want to know it. Yeah. So we ask those questions, and we do a lot of discovery on those. It's not a rate. Anyone can do a rate, but we're going to look at
the whole coverage
to make sure it's right.
The big picture. And I think that's the thing that's really important is that there are companies out there that will quote you a cheap policy. But at the end of the day, are you adequately covered? If something goes wrong, is your claim going to be paid? Are you going to have the wherewithal to recover from that calamity, from that hazard? So anyway, all right, well, great. So you mentioned a couple of things, right? Like about levels of coverage. How much coverage really should a homeowner have, right? You mentioned replacement value, right? What does that mean? How much what should people really have?
Well, the replacement value depends on square footage, type of home, where it's built, basement. So a lot of factors go into it. And again, how new is the house? How is the kitchen updated? Are the bathrooms updated? And so we look at the value and we let the insurance companies decide sometimes, and we talk to the client. What do you think a good cost is? Sometimes they say, no, I just built the home.
Yeah.
Some people just built the home and yours is more or less. So we look at that too. So that's important. And so it's what's inside your house.
Yeah.
What is important? I just did a house in Bethesda, had a rooftop deck and a rooftop bar, and that wasn't on the original. There's no.
And that's extra value. And if you want to put that back, right, you need to. Well, so like, do companies regularly quote less than replacement value?
No, some less, but most of them are err on the side of higher, or going higher, because they don't want to be in a situation that to rebuild your house and there's not enough money.
Money.
So I mean, you can put like what's called extended dwelling, but it's not really meant for that. Some people now, the whole trend now with some agents is, hey, we'll lower the replacement cost, but put 50% extended dwelling. It's not meant for that. It's not meant that. If that was the case, everyone would just get $200,000 of coverage and buy extended dwelling.
What is extended dwelling? What is that?
It means if you had to rebuild your home in circumstances like you had a catastrophe of all the homes were a tornado, well, their cost is all of a sudden going to go up.
It costs to rebuild because there's such demand to do that.
So they're going to have like a cushion on top to rebuild.
Yeah. Okay.
So
all right.
But we also look at stuff like do you need flood insurance, sewer line, backup, line going out to the road, coverage is something that's, a lot of these lines are now corroding.
Yeah.
So it's $9,000.
Well, we have a lot of aging infrastructure, especially Baltimore City.
Right, Baltimore City, right. So we want to make sure that we cover. So we don't want to sell a homeowner's policy and folks find out that they have gaps.
Yeah, right.
So we try to cover, or at least let them explain to them what is available and what's out there and what we see they need to cover.
Yeah. So you mentioned some of those other types of coverage too, right? The flood insurance and the sewer line backup and things like that. Are there other types? Like I know, out in California, they had to have earthquake insurance, right? So in Maryland, you remember the memes when we had the earthquake a couple of years ago with the lawn chair that fell over. I remember seeing those go around where, hey, we survived the big quake of whatever and never forget and whatever. But so typically we don't need earthquake coverage here, but.
Well, it's funny because this year we've written 3 earthquake endorsements on policies.
Really?
And each one of those folks had moved from California. So and it was $9-10, maybe $20 a year. So they were like,
not a lot, but I want it.
I want to be covered, right?
Yeah, sure.
The same thing with flood. Now, flood, most likely the mortgage company is going to, if you're on a FEMA
flood zone. Yep.
They'll pull flood cert.
Right.
And water is the most damaging part. So people, if you're not in a floodplain where it's highly rated, it's not going to be that much.
Yeah.
And we have FEMA plans. We also have private flood insurance. So we'll put it out to market. So if your property's never had a claim, it's going to be very inexpensive to do it.
Right.
And you're covered.
Yeah. Yeah. I mean, it can even be with some of those FEMA flood maps, your lawn is in the flood zone, but maybe just a corner of the house is, right. and it can influence the cost for that insurance policy.
Well, last September in Maryland, storm was off the coast.
Yeah.
It pushed everything up the bay.
Yeah, the surge.
The surge. So the surge flooded places that had never been flooded before.
Yeah.
So people were calling, hey, can I get flood insurance? And they didn't have a claim, so we could do it.
Yeah.
Because if it happens again, and FEMA plans only cover $250,000 and $100,000 of personal property.
Wait, a lot of that waterfront property is much more pricey than $250,000.
That's correct. So so we can do private flood insurance and get it more to value. And there's some different ways to do that, and it's fairly easy. We can do a quote in 15 minutes and have carriers that will give us a quote and lock in the policy right away.
Yeah.
There is a third now with flood insurance. You can't. There's typically, unless they're going to closing, we can get an exception, but it's typically a 30-day wait, because what would happen is every person would just buy flood insurance once the hurricane's off the coast.
Right. Right.
So there is a little bit of a wait there, but
okay.
But we have plenty of options. And
good. All right. So we were talking a little bit earlier about. Yeah, you have your home insurance, your homeowner's insurance, or your hazard insurance, but then there's also that idea of liability insurance, right? Yeah, somebody is on your property, falls, hurts themselves. So what's the scoop with the liability insurance?
Well, this is what happens. Somebody falls on your property.
Yeah.
The first call they make is not the emergency room.
Yeah.
It's their lawyer.
Yeah, right.
It's their lawyer.
Right.
Yeah, call their attorney.
And so we see it all the time. Again, we have 7-figure homes that people have, $100,000 of liability.
Right.
And that's all they want. And
yeah.
I'm like, no, we won't write it.
Yeah, not.
We would not have it come back on us. And we educate them and say, listen, we can do a $500,000 coverage, and it's a couple dollars more a year.
Right.
So it's not very expensive. It's not expensive to add. It brings value. It's peace of mind.
Yeah. Right.
And then on top of that, we can do an umbrella policy.
I was going to ask about that. Yeah.
So umbrella policies are.
If you have multiple proproperties, is that maybe a good idea?
Absolutely. Yeah. Any kind of real estate investor, you absolutely have an umbrella
And you have to watch with umbrella policies. A lot of carriers have what's called form fitting, which just follows the homeowners or follows the auto insurance that they have. And then there's umbrella policies out there that are true umbrella policies, because some things may not be covered under your homeowners.
Yeah.
But a true umbrella policy is going to cover you anywhere.
Yeah. Okay.
So we look at that too. So we look at the needs and the multiple properties and the multiple cars and how many kids you have under the age of 25.
Right.
It matters because they tend to
they have a little bit more risk.
more risk. And then they look at.
I remember when I was under 25.
they look at animals, not just dogs, horses.
Yeah.
Well, how about the idea? I one time had a pet, a puppy. We were moving furniture into our Delaware house. Left the door open. He got out, ran out to a lady. She claimed she got knocked down.
Ooh. Oh, yeah.
Yeah, by him. I told her, send me the, go to the hospital, send the bills. She never followed through with that, but I was glad I had an umbrella policy because of something like that.
Right.
Well, we had one where the guy got a brand new puppy, and puppy with teeth, and the UPS driver showed up, right, and came out and snipped him and guess what he did?
Yeah, absolutely. Now it's not just people who are on your property legally.
Yeah.
It's even people who are
trespassers
on your
have
property.
have the right to they have the right to safe passage through it, even if they're trespassing.
Yeah, right. So yes, you're going to insure your property so that when your home is burgled, that person can burgle you safely.
Wow.
Absolutely.
But but the point is, liability. It's an important coverage. All right, so talk about the concept of bundling, right?
Right.
That's
Well,
somebody goes to buy a house. Lots of times they think, oh well, I'll just keep my insurance policy for my car where that is, and then I'll just buy this homeowner's insurance that I've never had. First-time home buyers,
Right.
They don't necessarily know, so they might talk to one broker for one thing, another broker for another thing. Does bundling in general help them? And if so, is there kind of a, by how much? And
thanks to Flo on Progressive, she made bundling famous.
Who's the other dude?
Mayhem.
So it's really important and maximizing.
And then cocktail. No.
And cocktail.
I'm laughing.
Well, bundling is important. Why is it important? Discounts. And more than discounts, because you can get some carriers up to 20%.
Yeah.
Average is 14% just from having this same carrier.
Yeah.
Most carriers now have the same deductible. So if you have multiple policies, let's say a hailstorm, or some other kind of, you're going to pay one deductible. That's important.
Yeah.
Because deductibles can add up. Other reasons are just having one point of contact.
Yeah, I always like to say one throat to choke.
So it does matter. Most carriers now, we do shop both sides, and we do present. And it often happens. The homeowners is more or less than the auto.
Yeah, sure.
Then we package them together, and then we give the clients, options. We say, listen, this is, if it's way off, then we don't bundle. But very rarely do we not bundle in the state of Maryland. Now going back to Florida, where you can't write a homeowners and a auto policy, it's very rarely done down in Florida because you have carriers that are only auto insurance carriers and carriers that are only homeowners carriers.
Wow.
Here in Maryland, we have companies that can do both, and we have 27 companies, so we shop it. We work for you. We don't care what the carrier, whatever the cheapest, the best rate, the best coverage is.
Yeah.
We're gonna go in.
Awesome.
Probably 95% of our policies are bundled.
Yeah. Well, made a big difference for us. I think, our success, I don't remember how many thousands of dollars we wound up saving, Jeff, but you saved us quite a bit. I was pretty happy with that. So, all right. Anyway.
Well, I'm still waiting on the crabs that you... No.
Anytime, man. So, all right. So, things that homeowners can do to help lower their policy, right? Things like putting in a burglar alarm or something like that. Are there other kinds of things that homeowners can do to help offset their costs, and what kinds of things have the biggest impact?
Great. Everyone has a Ring camera now. Ring cameras matter. So we add Ring cameras to policies every day, and we ask the question.
I have them all over our house.
Right. Me too.
We do. Yeah. I actually want to add one more, I think. Two more. Because I want to have, there's one side of the house that I don't have it on, and then I want to have one just out the front in general.
They're great.
And it's a crime reducer because
They see it exactly.
They can see it.
Yeah.
It was funny. So we
Well, and
had,
for me, because now I know when my wife's coming home, and I can rush to the door and give her a big hug.
Well, we mentioned before my wife was away, so now the Ring camera tells. Right, same.
The only problem is if you don't have your phone up, it goes to my watch, and if I'm playing around the golf, it vibrates.
Right,
You know, my back's
mine's going
You
off
do
now.
get those notifications. Yes.
So,
Yeah.
Ring camera is
Any of
important.
those kinds of
Right.
yeah.
Some people have new plumbing done. They had old pipes. It's important.
Yeah.
Insurance companies, water damage is huge. A new roof. If you get
Yeah.
a new roof, and people get new roofs every day, you know,
Right.
and it's important. Retaining walls, any kind of. So we want to know about it.
Yeah. And that's something people don't necessarily think about it, but when you have that work done, you got to get on the phone with the insurance company and say, "Hey, we just put these things in, and what does that do for us?"
Right. Well, most people don't want to do that because they're afraid their rates are going to go up. I don't want to increase my rates. Well, you want it replaced,
Yeah.
but we can offset that possibly by a reduction, and
Yeah.
especially if it's helping secure your home.
Yeah, absolutely. Yeah.
Some with new windows.
Oh yeah.
You know, especially in wind-prone areas, you know, it's important.
Yeah. Yeah.
So,
Okay.
so there's discounts. So insurance companies are coming up with different ways of discounting with incentives with home improvement. So we want to know about it. We're going to look at it and we're going to ask.
Right. Good. Okay. Are there things that are typically not covered by that standard home insurance policy? Like, people who don't have flood insurance may be surprised that
Right.
there are certain events that can happen in their home that they're not going to be covered for.
Well, you're seeing it now with some insurance companies. Now we don't deal with these. These are typically the captive agencies that are national. We mentioned one earlier. A separate wind and hail damage rider or a separate wind damage rider.
Yeah.
So there is possibility that some policies will not cover wind, will not cover hail, or you have a separate deductible.
Wow.
That's why we like to look at policies. Like people like to give me a rate. We don't want to see your current policy or the one that's being proposed to you, because a lot of insurance companies now are putting separate 1%, 2% deductibles in of a $500,000 house. It adds up.
Wow.
Yeah. So
And I've seen insurance companies use that kind of stuff and eliminate some of those coverages just to quote a lower rate.
exactly. So and if you're prone, and there's certain areas that are prone. There was an area in between Pittsburgh and Lake Erie, I think it was, but it had $1 billion of hail damage last year.
Wow.
It was a town, like a county.
Yeah.
It golf ball size hail.
Yep.
Now that wasn't all personal in homes, but it was car dealerships and properties. But it adds up. So
Hey, every house in Springdale had their roof replaced a couple of years ago. Yeah, when they had that big hailstorm that came
right.
through.
So you want to make sure you have the right coverage, because some policies are excluding. You know, in Maryland, a lot of them are comprehensive and they cover that. But now you're seeing a lot of new carriers, and carriers are coming up with separate endorsements
Yeah.
where you have to add it. If you're just going for the cheapest rate,
gotta be careful,
sometimes you got to
right.
be careful.
Yeah.
We won't let you. We won't write it. If people want to do that, we're not the carrier we're not the brokerage for them, because we can't be in that.
Well,
You know, they're going to come back to us,
right.
and we're going to, we can document it, but we want them to buy the right policy that they're covered.
Yeah.
And most of the times, Brad, we find that the rate is not that much more.
Yeah.
People look at it and they think it's going to cost, but we need to explain to them.
It is interesting. A lot of people will nickel and dime for a small difference in a payment, forego coverage that could really help them out.
Right, and it could cover, like you said, a brand new roof is
Right.
$30,000.
Yeah, can be. Right? Okay. So we talked a little bit about deductibles earlier. How do you determine what that right number is? Because you can play with the deductible.
Sure.
And
And
sometimes it can have an impact on what the cost is, right?
And
So-
it definitely
yeah.
impacts the cost, and so we play with that, and when we ask folks, you know, we look at their claim history.
Mm-hmm.
Jeff, I haven't had a claim. I've been in this house for 20 years. Okay, so maybe
Right.
we start looking at self-insuring that deductible.
Right.
Self-insuring meaning raise the deductible, higher deductible,
Yep.
and less premium.
Yeah.
So put it in your pocket. If you happen to have a claim, then you know at least you saved on premium.
Yeah.
That's the first thing we look at. If folks are not, you think of the opposite. You think like, hey, it costs more. But if folks that don't have a lot of cash flow, we can't put a high deductible.
Yeah.
And you would think the opposite, but typical deductible is $1,000.
Because they can't cover it if it happens.
Can't cover it.
Yeah.
So it's typical deductible in a homeowner's policy with us is $1,000.
Yeah.
We do as high as $5 and sometimes $10.
Yeah.
We've done as low as $500. Auto's a little different, but on homeowners it's typically $1,000.
Right.
It's a good number, but we definitely play with it. We definitely look at it. Like I said, a lot of carriers now are coming out with separate deductibles. So on page 6, you will see wind and hail deductible, 2%. 2% of a $500,000 house is $10,000.
Yeah.
So if you have wind or hail, and that's how they're combating, it's already happening in Florida, but it's coming here in Maryland.
Yeah.
And we don't do that. If we do, I mean, we can write. We had one customer say, "Hey, I'm not," because we only do full replacement on roofs and full replacement on personal property.
Right.
And she just wanted to. She just, I don't care about the roof. Just go ahead and give me the actual cash value. And I'm like, no.
Yeah. Right.
And I had to educate her on what that meant, because
Yeah.
her current agent said,
"Oh, just get the cash." Right.
yeah, don't worry about it. It's a fairly new roof. It wasn't fairly new. But even new roofs get damaged with hail.
Yeah, absolutely.
So new roof, yes, and replacement. And that's the other thing with replacement roofs is a lot of people think that buying insurance is a warranty policy for their new roof. No,
Right.
it has to have damage. Now,
Right. It doesn't. Yeah, insurance is not there to cover things like
Wear and tear.
Wear and tear. Right.
Right.
It's for a catastrophic event.
Right.
Right. Not for I never changed my filter in my AC and now my HVAC has to be replaced. Right. Doesn't alleviate you from the responsibility of taking care of your house.
We got a call. We were a young couple bought a house in Dundalk, and their bathtub was leaking. And I said, well, did anyone
Caulk.
cook?
Caulk.
He goes, well,
caulk
I didn't know that.
nothing.
And I said, well, send me your homeowner's inspection, because I got the referral from the homeowner inspector.
Yeah.
And homeowner inspection said,
Called it
caulk
out.
the bathroom. It's old and it needs to be caulked around it or it's going to leak.
Yeah.
And so
And they just ignored that.
they ignored it. And,
Yeah.
well, they didn't know, but they
Yeah.
do know. So there's some kind of due diligence on the homeowners to keep it up. It's not a warranty program. It's an insurance program.
Yeah.
Like you mentioned before, some kind of catastrophic event.
Yeah. Yeah. Okay. All right. So we talked a little bit earlier too about the trying to suss through who are these companies, how should I work with them? Are there ways to assess the reputations of these companies to know how they pay out on claims, things like that? Like when I talked to Tom Drexler from Sage Title a while ago, he said, no, we pick our title company that we write through because of their history of paying claims. And that's a huge issue for us. So when you buy a title policy through them and you have an issue, there's much more of a chance that claim will be paid. So are there ways to assess that? Are there good metrics that people should look at? Any of that kind of stuff?
Well, that's one thing we do, and it is important that there are insurance companies that do not pay claims.
Yeah.
They have a reputation for it. We don't represent those companies. But also, that being said, all claims sometimes have issues with claims adjusters. Mm-hmm. And that's where we get involved. I'm involved in almost every claim. I want to be involved in the claim, call me.
Right.
Because I'm going to get your claim paid. One guy in our group, his initials are JP, I won't mention his name, his wife was hit by a Flo's company. I'm not going to say the name. And it's been 6 weeks, and he can't even get a call.
Wow.
Well, I could give an example to listeners out there. I never knew this. You told me. So when my daughter's car was parked at a restaurant, she was working in Delaware, somebody hit her bumper. And I called just to inquire a little bit about, I wanted to determine whether it made sense for me to fix it myself or put a claim in.
Yeah.
I never moved forward with a claim, but when you went to shop prices for me, you told me that there was a claim and there was $0 amount, and that you should never do that. Call your agent first, right? So that was something that I never knew, that was really, really important, having an agent looking out for you.
Yeah.
Once you call the insurance company, $0 or $10,000,
it's recorded.
It's the same tier.
I had no idea.
And it's recorded, and then it goes against you on the, on your tier score.
Which is why it's a great idea to have a broker who can.
Yeah, because I never put a claim in, and I was
right.
just looking for some information, and
I'll give you an example. We had somebody that's daughter's recently out of school, and she drives down the city from Harford County.
Yep.
And a rock fell off a truck or something, and it hit her mirror.
Yeah.
And her daughter was all upset. She had a brand new car, and she was all excited.
Mm-hmm.
And the client called me and said, "Jeff, did we put it in?" Now they've called me, so I really should put it in. I said, "Listen, go to Jones.
See how much it's going to cost.
See how much it cost." And it was $1,000. So I said, "Do not put this claim in."
Right.
But we are not an agency. We have plenty of agencies. We get calls all the time of agents that say, "Don't put the claim in because it's going to hurt my bonus and my percent." No, we're not like that.
Right.
If you have a claim and it's insurance, we're going to make sure it's paid. Now,
but you can help people think through that.
But we're going to evaluate the dollar amount.
Yeah.
And does it make sense? Does it make sense to, or if they've had multiple claims, do we not want to put this next claim in because you maybe non-renewed?
That's smart. It's a price benefit analysis.
Yeah,
you got to look at it.
Yep.
Right? Cost benefit analysis.
Yeah.
So we want the first call to come to us and let us deal with the because when I call, I typically have a way to get through to.
And you know all the lingo, you know the people to call, you know exactly what you need to have happen versus the homeowner who doesn't really have that experience.
Right. We had an example of a guy in Bel Air that had a flood. They were away and the basement toilet started leaking.
Yeah.
It came back to a foot of water.
Yeah.
And he didn't know, and he's a he thought he knew everything in the world, and he didn't know anything.
When you go away, turn your water off.
Right. You didn't, and he didn't. But we replaced old TVs, old wine lockers, and everything else, and he didn't know where to start. And then he was, "Oh, they're giving me a runaround." I said, "No, they're not giving me a runaround." He didn't know. I called the adjuster. We got it done. We had everything moved out. We had it. I mean, it took 3 months to get everything fixed and back to normal because they had to tear the drywall out on the floor.
Yeah.
But he's happy, and we took control. I actually drove up there because we want to make sure it's done right.
Yeah.
And this was a shock. I mean, no one wants to come back to a foot of water.
It's not definitely what you don't want to have happen when you walk in your door after vacation.
And so when you call the claims department 1-800-CLAIMS, you don't know who you're getting.
Yeah.
Right.
We have dedicated claims people that we deal with on our end. So we're typically, "Hey, can you take direction?" Or what we call a claims manager.
Right.
I'm direct dial to their management.
Yeah.
To their manager.
Yeah.
If you're calling 1-800, you're going to get whoever's picking the phone up.
Yeah.
And if they're having a bad day, they may not want to pay the claim, and that's not why we're in this business.
That's great. That's great advice. I love that. All right, so we talked about a little bit earlier too the idea of looking at it again, looking at your policy again. How often should people do that? Right? I mean, obviously, if you're putting in a lot of upgrades and things, that's going to change the value of your home. You need to make sure you have adequate coverage. But is there a general rule of thumb of, hey, every couple of years it's a good idea?
Well, we're telling them probably when they have major events, changes, yes, to cause. We're going to look at it every year, and we're going to look at the, they may not see it. We're going to make suggestions on prices. Today in the insurance world, this hard market with inflation numbers, insurance companies are doing it for them.
Yeah.
And a lot of people don't like it, and they're getting a 20% increase. But I tell them, well, look at the number. They're saying your $500,000 house is now $620 to rebuild.
Right.
They have numbers that can prove that inflation costs are up.
Yeah.
20%, and they're doing it for themselves, for the mortgage company, and more to protect you, their house. So with inflation costs, with numbers that go up, the costs go up.
Yeah.
So we have to explain why it's going up. And if some people say, "I don't want to pay it, I don't think it's worth it," we can go back and fight it. But we
shop again.
Or shop. So, and we typically shop every year. Now, most people aren't going to call if the rates aren't going up.
Right.
If everything's fine, they're not going to go up. But we want to hear about, and we send little postcards out, little notifications. Everything's electronic now, but hey, if you have any changes, let us know.
Right.
Some clients, I've been in a new kitchen. Like I said, there's a wine locker and cellar, and I'm like, well, did you call me? Well, I don't want my rate to go up. Well, who's going to pay for this? So
Right.
you had a standard kitchen with
Right, and now it's worth $100,000 more.
Right. So you're proud of it, but you need to cover it, and most of the time it's not that much more to cover it.
Yeah, and I think that's a good message for people to take away, is that you may think, oh, I can't afford this. It's going to raise my rates so much, and maybe it doesn't. Right? It's not always as much as you think, but get the information.
Right, yeah. And we find regionally there's certain carriers that are pop up in certain areas that are all of a sudden they're competitive in certain areas. So that's another reason we'll change. Some people say, well, I don't want to change. Well, listen, X insurance company is now more competitive. They want to be in this market. They want to be in this area.
Right. Right.
Some
and as
people,
long as they're a good company and they pay their claims, hey, save some money. Absolutely.
And they get skeptical, like, well, why would I want to change? And I'm like, well, I want to make sure that you know that you can change before you let me know you're changing.
Yeah.
So
Right.
so we do our due diligence. We shop most everything every year. We look at the policy, we look at the renewal, we look at the action, we look at who it is.
Yeah.
And we have a rater system that we have 27 companies, and we hit a button, everything's in the system.
Yeah.
So for us, it's already in the system.
Yeah.
And we look at who's competitive. And if it's a significant change, we're going to let you know, and we're going to suggest to make the change.
Beautiful.
We don't want to mess if you move too much, we have people that want to move every year, then your insurance tier score goes down. It's not quite a credit score, but it's important to stay with, have tenure.
Have consistency. Yeah, sure. All right, fair enough. Okay, so, Jeff, you may have noticed sometimes we talk a little bit about turning things up to 11.
To 11.
Yeah, we're Spinal Tap fans here. So just question number 11 is just a general, do you have any additional thoughts that you want to share? Any advice about new homeowners going into this thing? Anything that they should think about?
Well, it's important that you have the right coverage. That's one thing we're going to do is we're just not going to sell you a policy based on price, when we talked about that before.
Yep.
If we need to dial down price to get the loan approved, we talk about that sometimes. We need to have the conversation of getting you properly covered.
Yeah.
It's important because everyone wants to save money. And we're going to do our best to get you with the best carrier, but you want to make sure that your house is properly insured. And remember what I said before, you're not buying insurance. Everybody thinks they're buying it to protect the house. You're really protecting yourself.
Correct.
Yeah.
It's your asset. It's you're on that loan doc, that mortgage agreement, and you're responsible if somebody gets hurt. So we want to make sure you're properly covered. So everything you've worked for and built for your whole life isn't taken away.
Yeah. I can't imagine being somebody who upped their deductible, lower the monthly payment on it as part of their mortgage payment, then only to find out when a claim does have to be filed that they don't have the liquid savings, emergency savings to cover that $3,000 or $5,000. That's a big deductible, and some people I've seen do that, and it's not always wise.
Yeah.
And there's probably a nice, happy solution for that person.
Yeah. In the auto world, it's uninsured motors or underinsured motors. There's protection sometimes on the other end. Homeowners, it falls on you. And, and if something happens and the courts prove you're wrong, they're going to get paid. So we want to make sure you're covered. Again, we can do it by liability coverage. We want to make sure your dwelling coverage is up. We can throw an umbrella policy on top of everything else and make sure you're covered properly. And you can sleep at night. And if something does happen, you are covered, and we're going to do our best. Like I said, we're going to shop it, and we're going to make sure that you are covered fully, and that's all we got. We got
Fantastic. All right. Well, fellas, great information as always, Jeff. We really appreciate you being here to share all this information. I think it's great information. We'll look forward to continuing the conversation. We got another episode we want to have you on down the road, so I'll let you know about that. I haven't told you about that yet, but we do. But thank you for carving out the time, and I know people will find a lot of value in what you've shared.
Thank you for having me, and everyone enjoy their day.
Absolutely. Thank you. All right, so we're going to take a quick break. When we come back, we're getting into the unreal and the spotlight. So we'll be back in just a sec. And we're back to Be Real, the Maryland Real Estate Podcast. Brad Cox with the Vesta Group of Long and Foster. And
Michael Becker of Sierra Pacific Mortgage. Time for this.
And Jeff Nangle with State Insurance Group. Still here.
Still here. Thanks for hanging out.
Yeah, man. Thank you. I really appreciate you being here. And in that last segment, some really great information that you shared. So really, really appreciate you being here, man. So moving into the unreal, Michael found some really good information.
Well, it amazed me when I saw the headline, and sometimes the unreal can be negative, and I wanted to go
sometimes
positive.
It's nice to go positive.
With this. So,
yeah.
Appreciation in housing values.
Yeah.
Residential real estate is the largest U.S. asset class now. Period.
Yeah.
40 total net worth or total value of residential real estate is $43 trillion in the United States.
43.5.
Okay.
Let's not shortchange.
Fair enough.
I mean, $500 billion is still a lot.
The market capitalization of the entire S&P 500,
yeah.
$36.7 trillion. The total value of all U.S. public companies, $40 trillion.
Yeah.
So now housing exceeds the value of those. The reason we bring it up, because we've talked about it in previous shows, is how owning a home is the way for the middle class
to build wealth.
Yeah. The increase in value in residential real estate since, is it 2013? It is 2013. How much have we got picked up?
A lot.
It's $19 trillion. $19 trillion is quite a big increase.
Yeah.
Went from it was
23,
25 million.
Yeah, that's right. Yeah.
So in that range up to 43 and a half.
Yeah.
That's quite an increase.
It's amazing.
People who've bought homes during that time have seen a nice appreciation.
Mm-hmm.
I think it's a big appreciation because if you go back further, it might not be as much because we did have those bubble years, the housing crisis, where the no-doc loans and the reduced documentation kind of drove price appreciation faster than it should.
Right.
Now we're seeing similar appreciation in recent years, and a lot of people are scared thinking it's going to be a pullback. Mm-hmm. The hottest markets probably have seen a slight pullback, but nothing crazy. And many markets haven't.
Not like what people are predicting, the doomsayers.
And it's demographic driven.
Yeah.
I mean, there's a lot of demand because two of the largest, actually now that baby boomers are starting to die off, the two largest population groups are Gen Zs and millennials. They're bigger than Gen Xers.
Right.
And that demographic is going to drive housing value because since the housing bubble burst, home builders have continually been cautious about building a lot of homes, and perhaps the cost of building new homes has gotten ridiculous with regulations.
Yeah.
So,
Yep.
So in addition to that good news, Brad, all that wealth went to people who own homes, but surprisingly, even though those values went up, what happened to below median income buyers?
So that's really encouraging.
It is encouraging
because the overall increase in total home ownership rate went up in general, but a lot of that can be attributed to the strong growth in that below median family income home ownership rate, and that has gone up from 2016 to now from 48% to 53.4%.
Doesn't sound like that, but if you look at the chart and the trends of where they had been, that is a big increase.
Yeah, absolutely.
And the encouraging part about that is
at the income level where it is.
The gap between those above the median income and those below has closed, meaning it's the below median income buyers that have been becoming homeowners, and I think it's steady for above median income buyers. That's very encouraging. So there's lots of talk of whether the real estate market is healthy or not. Those are two stats that point to the health of it. Higher interest rates are hurting it. They're not going to stay this high forever. The idea behind all this information we're giving out is owning a home is worth it for those who can achieve it. And those who don't think they can achieve it should reach out to us and let's
have a conversation
and start building a plan to make that happen.
Yeah. Beautiful. Thank you, Michael. I love it. Okay, so moving into the spotlight this week, we're spotlighting I love this restaurant. Have you ever been to Maggie's Farm in Hamilton?
I haven't. I've heard good things about it.
It's so really nice place. Farm to table. A lot of their food. So they're at 4341 Harford Road. That's 21214 Hamilton area. A lot of their food is sourced locally. They like Cole Family Farm, Rosetta Farms, Zeke's Coffee. They even have their own garden. They pull a lot of that stuff out there. Everything's farm to table fresh, right? So the ingredients are super fresh. They have a nice little bar. They've got an outside patio that's nice.
Everybody has that these days, but
the Parklets down in like Anna's place, Sobo Cafe down in Fed Hill.
I love it. I mean, places you wouldn't think because of COVID they've opened up outside dining.
Yeah, thank you COVID for al fresco dining.
Correct.
Yeah, it is kind of a nice
only
trend.
Europeans that do it now, Americans.
Yes, and it's about time. Anyway, so not something that I would normally leap to every time I go out, but they had this, last time I was there, they had this cauliflower steak that was unbelievable.
I'm surprised because I can't imagine it.
It was really good. I'm a red, hey.
Was it cauliflower or steak?
It was a cauliflower.
Cauliflower,
big,
but thick and just, holy cow. I mean, it was really good.
and grilled?
Yeah, just outstanding. But a lot of their food, everything I've ever had there is really solid, and they've done a nice job. Been there for a while. I can't say enough good things about them, and it's just a little tiny place in Hamilton, but they're really doing it well. So Maggie's Farm, check them out. They're open Tuesday through Friday, 4 to 10. Saturday, they're open from 11 a.m. to 10 p.m. And then Sunday from 11 a.m. to 4 p.m. And they're closed on Mondays. So they're on Instagram at Maggie's Farm _MD. And they're on the web, www.maggiesfarmmd.com. Or you can give them a call, 410-254-2376. So, fellas.
Yes.
Episode 23 done.
Sounds good.
Thank you guys very, very much.
Thank you for having me.
Next week, we're going to talk about well and septic. And we've got another guest coming on. So we're stacking them up. This is really, I love it, actually. It's kind of fun. Even though I love hanging with you, Michael, but we're spicing up our relationship.
Absolutely.
Anyway, so if you want to listen to us, you can listen to us on the web, www.berealpod.com. You can listen right on the site. Submit your comments. Give us feedback. Tell us what you like. Tell us what you don't like. Tell us what you want us to talk about. Love to get any information from you that you want to share. We're also on all the major podcast platforms now, including also YouTube. So search for @BeRealMDPod on YouTube. And if you're there, hit that subscribe button and like and comment. And if you know of anybody who would benefit from the information that we share, please pass that information on to them. So, special guest star, Jeffrey, if somebody needs to reach you guys to talk about insurance, what's the best way for them to get in touch with you?
Well, our company is Bay State Insurance Group. The initials are BIG. So we have a website called SaveWithBig.com.
Yeah.
And my cell phone directly is 410-419-6273. It's always on me. And
beautiful.
We'd love to talk to you and review your policies and shop it and give you the best rate possible.
Awesome. Thank you, Jeff.
With the best coverage, of course.
And Michael, somebody needs to talk about mortgages?
Call me.
Yeah.
I love to have that conversation. Phone number is 443-310-0012. Or if you don't want to talk, but you have an idea and want to set up a meeting, text me. Same number, 443-310-0012. Finally, if email is your preferred communication method, it's michael.becker@spmc.com.
Beautiful. And if you need to reach me to talk about real estate plans, my number is 375-7550, or you can reach me via email, brad@homesbyvesta.com. I don't care which way you want. You call me, text me, email me, whatever.
Just make sure you reach out.
Yeah, smoke signal. I answered all of it. Anyway, all right. So, fellas, thanks again. Another great episode. Looking forward to our conversation next week, and hopefully everybody got some great information out of this episode.
I think
I
they
just
did.
love
Absolutely.
I love what Jeff has shared. So
I love listening to you guys. I want to buy a home now.
well,
I
we can help you
I'm
with
so
that.
excited.
We can help you with that.
We can. All right. Well, thanks again, guys, and thanks again to all of our listeners. Look forward to talking to you next week on Be Real.
The Maryland Real Estate Podcast.
Take care, folks.
Try me.